Interest rates are set to rise, but there's still plenty of buyers in the housing market. The US promises to deliver Australia's submarines as fast as they can, and watch prices, which soared during the pandemic, take a dive. It's Monday, the 5th of December, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Nice weekend?
Yeah, it was a very nice weekend. And actually, now that you mention the weekend, Sean, the weekend edition was a lot of fun this weekend, wasn't it?
It sure was. I think it is probably the funnest of all our shows during the week, I suspect.
I think so too. And so for anyone who hasn't listened to the weekend edition, it is basically we do a bit of a wrap of the stories of the week, and it's very competitive between us, and we try and pick some winners. And our Fear and Greed colleague, Adam Lang, joins as our adjudicator. And it gets a bit wild at times.
Look, sometimes he gets it right. Certainly he didn't get it right this week because I lost. You won.
I think he did because of my glorious victory. And I got some great feedback from listeners over the weekend about that victory. Very encouraging. Slightly patronising at the same time, acknowledging that it's taken a very long time for me to get a win on the board. But anyway, it's worth going and checking out. Or if you don't want to go back, just make sure you put it in the diary for this coming weekend. Anyway, Sean, we've got plenty to talk about today. You've got a fantastic interview coming up after the show, all about M&A activity. You're speaking with Sandy Mack, Head of Corporate at Cause Chambers Westgarth.
Yes, so last year was a cracking year for M&A. This year has been pretty ordinary. It started okay, but then it really faltered. We talked to Sandy about what's going to happen with M&A next year when she talks about the sectors that she thinks M&A, mergers and acquisitions activity, is going to really ramp up next year. It's a fascinating chat, not just if you're interested in mergers and acquisitions, but also if you're an investor particularly, because obviously M&A has a massive impact on share prices. So well worth a listen.
Yeah, sure is. It's coming up a bit later on. The main story, though, this morning, Sean, the Reserve Bank is expected to lift the official cash rate by 25 basis points tomorrow, taking the total increase in rates since May to 3 percentage points. But there are still buyers in the housing market.
Yes, that's right. Let's have a look at what's likely to happen tomorrow when the board of the central bank meets. Rates will probably rise by 25 basis points, adding an extra $112 or thereabouts to the monthly interest bill on a $750,000 mortgage over 25 years. That means since the Reserve Bank began hiking rates back in May, the cost of repayments on that size mortgage will have gone up about $1,250. That's a lot of money. Financial markets have priced in more rate rises, though the confidence in just how many more has waned just a touch. A couple of weeks ago, the markets priced in a 3.8% peak in the cash rate. Now it's priced in a 3.6% peak. If they are right, that means another 50 basis points in rate rises early next year. But that's about it. Now, remember last week, the US Federal Reserve made it clear that it had done plenty of the heavy lifting when it comes to rates, which are being used to try and slow inflation. What the Reserve Bank says tomorrow is all important, Michael. It doesn't meet again until February, so tomorrow's statement really is going to have a lot of focus on it.
Yeah, plenty of economists watching this one very, very closely. And Sean, house sales still remain okay. They're not exactly buoyant, but they haven't fallen off a cliff.
In fact, the auction market over the weekend was the busiest since June, with a preliminary clearance rate across capital cities of just under 62%. And the two biggest markets were among the better performers. Sydney's rate was almost 65%. Melbourne was above 62%. Canberra led the way with a clearance rate of 67%, while Adelaide was 63% and Brisbane 42%. Adelaide's come off a lot. That Brisbane number sounds low, but that's kind of typical really for that city at the moment.
A bit of a rush to get into to get these auctions done before Christmas. These sales, Sean, came ahead of the probable interest rate hike tomorrow, and also after CoreLogic figures last week showed that prices across the capital cities fell by 1% last month.
But at least the pace of declines has slowed. Now, some economists, many economists really, like AMP's Dr. Shane Oliver, are pessimists on the market, warning that the full impact of rate hikes hasn't really been felt yet, particularly because many buyers won't roll off fixed rate loans until next year. Some of them will go from paying interest rates of 3% or high twos to closer to 6%. Now imagine realising your next monthly mortgage payment is going to be about $1,250 higher. However, some economists aren't so pessimistic and reckon that the Reserve Bank might have done most of its heavy lifting as well. And as a result, prices won't fall too much more. It's going to be a very interesting statement from the Reserve Bank tomorrow afternoon, Michael.
Would you say this is one of the most anticipated Reserve Bank board meetings of the year, Sean?
I'd like to think that there's sort of about 10 or 11 of those really highly anticipated monthly board meetings every year.
So it would be a little bit too much to describe this as a blockbuster?
Oh, no, it's blockbuster.
Oh, fantastic. That's what I was waiting for. I'm just like, got to have something for the headline today. All right, how did the local market finish on Friday?
The S&P ASX 200, it closed down 0.7% to 7,301 points, but it was really a pretty good week with the bourse up 1.3% for the 5 sessions. Where does that put it? Well, the index is only about 4% off its peak back in April and about the same amount for the calendar year. It's up 13% from its low in September. That's not too bad, really. This is a whole year-long performance, given the energy crisis, soaring inflation, and a shock jump in interest rates. On Friday, falling oil prices triggered a drop in the energy sector. Woodside Energy lost 2.6%. Beach Energy was almost the same. Worst performer was corporate travel management, down 5.6%. Santos was off more than 4% as well after a defeat in the federal court that added to that particular company. The big banks were all down, as were the coal companies. The rally in the gold price gave miners of the precious metal a very strong finish to the week. 4 of the top 5 performing stocks on Friday were the gold miners.
And what about international markets?
Wall Street closed over the weekend pretty flat. Jobs data shows that 263,000 new jobs were added in the world's largest economy last month, more than expected. Still, that economy is probably not travelling so well and is likely to go into recession. In commodity markets, Brent crude is lower, trading under $86 a barrel. Gold prices are trading around $1,800 an ounce. Coal prices, all important to Australia, of course, have had a really good run over the past month or so. They came off a bit over the weekend, but they've really done well, and we've seen that via the performance of the local coal companies, places like New Hope, Stanmore and Whitehaven. And Michael, the Aussie dollar is trading around 68 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, delivering Australia nuclear submarines as early as possible is high on the US government's agenda as it prepares for a fierce period of rivalry with China. This is according to the US Defense Secretary Lloyd Austin.
Over the weekend, Mr. Austin unveiled the next generation of stealth bombers. I don't know, did you see them on TV?
It's incredible, isn't it?
Oh, they look fantastic. I mean, the technology in those, incredible. Anyway, he was unveiling those next generation of stealth bombers, and he made those comments afterwards saying the US was determined to bend the arc of history toward liberty, obviously taking a swipe at China there. According to The Australian, he highlighted the AUKUS agreement with Australia and the UK, whereby the three nations promised in September last year to boost their defence cooperation, including supplying Australia with nuclear-powered submarines by 2040 as a counterpoint to Beijing's growing power and aggression in the region. Defence Minister Richard Marles and Foreign Minister Penny Wong are both due in Washington this week to speak to their US counterparts.
Sean, accused Islamic State terrorist and leading global recruiter for the notorious jihadist group Neil Prakash has been charged with 6 terrorism offences after being deported home to face justice.
The Melbourne-born jihadist was charged yesterday with 6 terrorism offences by the AFP's Victorian Joint Counter-Terrorism Team, according to The Australian. Prakash will appear in Melbourne's Magistrate Court to face charges of engaging in hostile activity in a foreign state, engaging in hostile activity in a foreign country, being a member of a terrorist organisation, advocating terrorism, providing support to a terrorist organisation, and entering or remaining in a declared area. The charges could see the 31-year-old jailed for life. Prakash's extradition to Victoria was only approved on Friday after he was deported to Darwin from Turkey and taken into custody by the Australian Federal Police.
This is an interesting one, Sean. The National Broadband Network wants to cut prices for higher speed internet, but raise prices for mid-tier speeds, and also says wireless competition is hurting it.
Yes, NBN reckons it's at risk from wireless alternatives offered by telcos, particularly in the major cities where there's a lot more competition. Last week, NBN lodged a new pricing proposal with the Australian Competition and Consumer Commission, arguing that some telcos are offering 5G home broadband products as alternatives to the NBN. and are pricing them lower. NBN says it's at a cost disadvantage. Certainly Australia is now split into fibre to the home or node, where NBN dominates, is the main wholesaler there, and fixed wireless services, where the telcos are making inroads. Think of all those 5G services that are being marketed at the moment. Last week, the NBN told the competition watchdog that it won't look to recover at least $31 billion of the $44 billion in accumulated losses since it began building and maintaining the network. When legislated, the Rudd Labor government said the NBN would one day make a commercial return. If it's writing off $31 billion, that is still a long, long way away.
Yeah, just a little bit. Now, the corporate regulator has fined the Australian arm of Vanguard, which is one of the world's biggest fund managers, for greenwashing.
I think this is really interesting. In this case, ASIC said Vanguard had overstated the extent of excluding tobacco-related companies in one of its managed funds, and Vanguard had to pay nearly $40,000 in penalties. If you get into the detail, that's where it gets really interesting. Now, the Vanguard Fund said it excludes securities involved in the production, manufacturing, or significant sale of tobacco. Okay, it doesn't invest in tobacco products, get that. But ASIC said that the benchmark that Vanguard uses, so a lot of these big fund managers try and find benchmarks that kind of does the work for them. Now, the benchmark they used is the MSCI World ex-Australian, no Australia, ex-tobacco, no tobacco, ex-controversial weapons, no controversial weapons, ex-nuclear weapons index. So it's the MSCI ex-Australian, ex-tobacco, ex-controversial weapons, ex-nuclear weapons index. However, ASIC says that particular index doesn't exclude retailers and companies involved in the sale of these products. So Vanguard presumably went in thinking, we can follow this market, that can be our benchmark, because they don't do tobacco, but they do hold companies that sell tobacco. It just shows how difficult it is for fund managers to get it right when it comes to ESG. I'm not standing up for Vanguard. If they're promoting it, they need to actually make sure they do it right, but that ain't an easy job.
No, absolutely not. That's the thing that I've always kind of struggled to understand, is just how you can be sure that somewhere along that kind of supply chain there isn't a company that has some involvement in whatever it says that they're not involved in. And it's entirely kind of not deliberate, obviously, but that would just be such a big job trying to make sure that every element is free from what you're saying it is.
Yeah, exactly right. And it's happening with corporates as well, who are trying to get to net zero or reduce carbon emissions. They're using suppliers. How do they know those suppliers are actually carbon neutral or are minimising carbon emissions or whatever? A very big challenge for, organisations and funds for the next decade or two or three.
I think that story single-handedly just gave me a headache, Sean.
Sorry, Michael.
That's all right. Now, Solomon Lew's Premier Investments, which owns outlets including Smiggle, Dotti, Just Jeans, Portman's and Jackie E, is set for a big Christmas period and back-to-school sales after announcing a surge in trading during the Black Friday sales.
Things are certainly looking up. It had its best Black Friday sales ever. Mind you, last year it was in the middle of COVID lockdowns and the company lost 43,000 store days last year across the whole network. Quite incredible. Premier said customers continue to respond favourably to new 2023 ranges across its brands. One thing that they noted was it's not just bricks and mortar, but online sales during those Black Friday sales were the highest ever as well.
Don't forget, of course, Peter Alexander, owned by Premier Investments, and pyjamas are always big at Christmas.
Always big. In fact, I reckon I'll be getting pyjamas again this Christmas.
Is that a complaint? Do I need to forward this to your family?
No.
we'll just hope they're not listening. Now, I love a good plane, an aircraft, an airline story. There we go. Qantas, Sean, expects to carry over 8 million passengers over the next 2 months. On Friday, the national carrier said it was adding new routes and more flights for popular routes.
That's right. Qantas has started flights from Brisbane to Tokyo and direct flights between Melbourne and Dallas-Fort Worth. The inaugural Sydney-Seoul flight takes off later this week. It's also adding flights across to Tasman. The Sydney-Queenstown route is getting 4 extra return flights per week. That takes it to 14. An additional 3 return flights per week will also be added to the Sydney-Fiji route for 6 weeks from mid-December.
All right, moving on to overseas news now. And US media giant CNN has cut hundreds of jobs, mostly paid commentators, as the world's largest economy heads for tough times.
In fact, the US economy is probably heading for a recession, if it's not there yet. And what's happening at CNN is likely to be repeated at many other media organisations and also plenty of other companies. Reports suggest that NBC Universal, which owns NBC News and MSNBC, will begin laying off staff next month, while Disney, which owns ABC News in the US, is likely to cut jobs under newly returned boss Bob Iger.
Sean, Russia has built up a fleet of more than 100 aging oil tankers to help get around restrictions from the West on oil sales.
Shipping broker Braemar estimates Moscow, which relies heavily on foreign tankers to transport its crude, has added more than 100 ships this year alone through direct or indirect purchases. According to the Financial Times, the fleet is Moscow's attempt to get around international bans on Russia's oil, with new restrictions coming into force today. Over the weekend, Australia and the group of 7 nations joined the European Union in adopting a $60 per barrel price cap on Russian oil, which will hopefully hinder the flow of money to Russia.
Finally, Sean, watch prices. I mentioned this one at the top of the show. They soared during the COVID pandemic. They've now fallen back, and used watch prices, which I'm guessing, Sean, would be considered a second-hand market.
Oh, I like it. Very good.
I think I regret
Yes,
that. But
yeah.
anyway, those second-hand prices are down nearly 17% over the last year.
Yeah, do you remember, Michael, we talked about this last year about watch prices going through the roof, particularly Swiss timepieces? Anyway, they've just totally come off. So the prices of brands like Rolex and Patek Philippe surged in 2021, even at the beginning of this year. But according to Bloomberg, the Subdial 50 index, don't you love that for a name of an index? The
That's
Subdial
fantastic.
50. It tracks prices for the 50 most traded watch references by value. Well, it's tumbled. There's some talk that it actually mirrors the crypto world, although you can imagine the watchmakers aren't fussed on that particular comparison. Like many other goods, of course, people stuck at home, just sort of they were cashed up and they spent their money on watches. Now they're spending on services, things like travel, hence watch prices are falling.
All right, up next, Sean, is the Fear and Greed Daily interview, and today you're speaking with Sandy Mack, Head of Corporate at Cause Chambers Westgarth.
Yes, all about mergers and acquisition, and the fact that she thinks things are going to pick up again into 2023, and particularly the second half of the year.
And of course, don't forget, Stephen Koukoulas, our resident economist, joins us as well for Fear and Greed the week ahead, of course, ahead of tomorrow's blockbuster Reserve Bank board meeting.
Blockbuster. It's a blockbuster week because, of course, we've got GDP, economic growth figures out on Wednesday. Now, in a boring week, I would say Stephen's still very, very excited. So you can imagine what it's like this week.
Yeah, he is all fired up. It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Monday, the 5th of December, 2022. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.